please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The SGX Nifty is indicating that we'll have a flat start this morning. Of course, at one point it was down about 50 points, but it's recovered that lost ground. Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar now join us. Good morning, gentlemen. Ashwini, thoughts from you first. Truncated expiry week. How should you trade this market?
Well, good morning. And trend remains weak. And today, SGX has recovered, although to 99.90. But what it's done is it's reached exactly into the zone from where fresh shorts can be taken. That zone was about 10,000 thereabouts. There was a traffic jam in this 99.90, 10,020 sort of zone on Friday. So if we are opening there, then the opening trade becomes very easy, where you get short on Nifty as well as Bank Nifty. I think you will at least test Friday's lows, if not break them. In fact, the kind of climatic action which has now started with in most markets, I think this is that sort of period which we saw from 10,500 to 11,000. It's now in the reverse. So you'll cover a lot of ground with absolute ease. So on all rallies, people should still go short.
Okay. Good morning, Ashwini. Can you tell us your levels on Nifty Bank, if there are?
See, on the Bank Nifty, about 24,735, 750. Keep a stop around 24,800. And that should work because the banks are clearly weak. And I would call 70% of the Bank Nifty as being in a bear market, where 50 to 70% of the value has been lost. So that way, that remains the index which will lead us down.
Okay. All right. Sudarshan and Mitesh are also with us. So let's get some quick comments from them as well. Gentlemen, morning. Sudarshan, do you think that this market is still in a bear grip? And considering it's a truncated week, what do you do?
Yeah, good morning. Well, I now have a different view. We have been bearish in this market and talking about a target of 10,000. That target has come. It's taken 2 months to reach there. And the momentum, the downside momentum in the last 15 days has been waning. We had big waterfall declines in February. Those declines have stopped in March. We are still falling, but the momentum is much lower. The first few weeks of February saw 700 points of decline. The last month has seen 300 points. I also think the same scenario is playing out in the US markets. Everyone is tired of selling, I would suspect. My view for April, which is a larger view, is that we will have a handsome rally in April. That means we should now get on the long side of this market. Now this market can easily fall 100 points again, become choppy, build a base before it starts a rally. But April should surprise us on the long side, on the buy side. So I'm no longer looking to go short. We'll wait patiently for today. For today also, if the markets break Friday's low, 9950, I would be a buyer there for an intraday trade. So I'm no longer looking to go short. I'm looking to go and buy on every dip.
Okay. Someone in this room also said earlier today that April could be a great month. But Sudarshan, what might change your mind? What would be the stop loss for your trend of thinking?
Well, the stop loss for a positional trade is that you just buy call options and the value of that call is the stop loss. Because we will see 100 and 150 points choppy declines in between before we actually begin an up move. For today's trade, the stop loss is 9,900. If the Nifty comes and touches or breaks Friday's low of 9,950, we go long with a 50-point stop under 9,900.
Okay, that's interesting. Mitesh, good morning. Your thoughts? You have also been negative on the market. Do you think there's more on the downside, or are you looking to cover shorts?
Yeah, good morning. So I think the only thing which is kind of different this time is that we are quite oversold and we've been falling regularly for the last few days. So from a trading point of view, I don't think I still have a change of directional view, but tactically I think when you're slightly oversold, you try to trade with tighter stop losses. So that's the only modification in the strategy. Or otherwise on the Nifty, I think unless until we cross the 10,050, 10,100 zone on the upside, I wouldn't be very positive. Similarly on the Bank Nifty, I think anything close to about 24,000, 23,800 would be a very, very strong supply zone and give you a good shorting opportunity. So I would still trade with more of negative bias, maybe slightly change tactics in the sense that tighter stop losses will be used and we'll try to sell on bounce backs.
Okay, well, Cipla could be in focus this morning on the back of the Aloxi generic. They launched that Aloxi generic in the US market under an agreement with Hysin. By the way, Aloxi generic is used for the treatment of nausea related to cancer treatment basically, and it has about a US sales of $460 million. So we'll try and get more details, but for now,
a small market if it's only all of 460 million, and they are in partnership with Hysin. So it may not add so much to bottom line. We'll have to wait and see.
Okay, well, let's get some more stock ideas then. What should you be doing with individual stocks? Ashwini, there was quite a bit of delivery-based selling, especially in private sector banks on Friday, names like ICICI Bank, Yes Bank, etc. What do you do in this week, and what else would you be looking at in terms of individual stocks?
Well, corporate banks, before the results, will probably discount all kinds of bad news, and that is the segment which is getting into a bear market. So private banks, any rallies you get in the morning should be used to sell. There's no doubt about that. In terms of other stocks, like if you get a decline on Ashok Leyland, that's a buy with a stop of 138, target of 150. Titan is a buy with a stop of 888, target of 1020. At the same time, Bank of India is a sell with a stop of 100, target of 92. Canara Bank is a sell with a stop of 250, target of 235. And metals is now looking weaker, so Vedanta is a sell with a stop of 280, target of 266.
Okay. Yes, a lot of banks there. But I would assume oil refining stocks as well will have the same problem. Sudarshan, what would your trades be?
Well, I have short trades in that segment, NBFCs and public sector banks. PNB as usual is a short sell. Again, I say as usual because PSU banks are not going to stop falling, but they will have relief rallies and probably go lower again. And Capital First is also a short sell. It's part of the NBFC group, which is likely to be a significant underperformer in this market. Then there are buying ideas. Colgate is a buy. That's part of the FMCG group. Titan, which by itself has been an outperformer, is a buying opportunity, and Mindtree from the mid-cap IT. These are the themes for April: IT, pharma, FMCG, and independently Reliance. And PSU banks and NBFCs should be sold even then.
Okay. Mitesh, what about you? You have 4 sell calls actually and just 1 buy.
So I'm still trading with more on the short side as yet. I think until we start getting past 10,050, 100 zone on the Nifty. I have a sell on GSFC with a stop at 120. Look for targets of around 110. Piramal Enterprises chart had some intraday sell signals on Friday, so keep a stop at 2440. Look for declines to about 2315 levels. Raymond's is on the verge of breaking the 200-day average, so that's a sell. Keep a stop at 905. Look for declines to about 860. And Andhra Bank had a continuation gap breakdown on Friday, so that's a sell with a stop at 41.2 for targets of 37.5. And the solitary sell call is Asian Paints, which we've observed time and again bounces back from range of about 1095 to about 1092. So keep a stop below that and look for targets of around 1144 on the upside.
All right, guys, thanks for giving us those cues. We'll also get some F&O cues out of the way. Vinod Sharma of HDFC Securities joins us now in the studio. Vinod, hi, good morning. Given the kind of volatility we've seen, the downtrend, you reckon that could be the case this week as well? And how would you approach the index?
Yeah, good morning, Sonia. As compared to the other colleagues who've been here, they appear at least 10 times a day during your channel. So I, for one, would appear only once a week, so I'll have to speak for the week. And this is a holiday curtailed week. We are only going to have 3 sessions. So I am going to say that you should utilize any dips during the current week to build your longs and cover your shorts. This is my take. Technically, the Nifty, which had made a low of around 7893, that was the post-December, that was December 2016, post-demonetization low. If you compare that and 11,171, 38.2% retracement, a classic Fibonacci retracement comes at 9920. So that number I'm going to hold, and I think it is cast in iron at this point of time. So with that, should the Nifty tumble to 9950, I'll be a buyer in the 10,000 call. But before that, I'll have 5 different ideas, and I believe that while this is a developing story, the trade. The sanctions, it is not going to be a war as much. If you look at China, they have not gone all out. They've left soybean, they've left Boeing, which they could easily hurt US. The fact that they've done so, this means this is nothing but posturing at this point of time. This, of course, is a developing story. But for that, I'll be a buyer in these dips in the next 3 days.
Okay. Well, so 9920 is a number we got from the other technical experts as well.
Okay, so we know let's discuss individual stocks then. Good morning. A lot of mid caps on your list.
Yeah. Let me explain why mid caps. I mean, all are mid caps. ICICI Pru, because of the fact that this is a insurance sector, it has made almost a double bottom. And despite the bank, the parent being in some kind of a trouble here, we still feel that this is a stock which will not see FI selling, and which in fact has seen only 1% position being built in the entire series, in which the stock has gone down by 5%. So I'm buying the 380 call at 5.8, stop loss at 3 and a target of around 11 here. Another is Manappuram, which again is a finance company. I'm buying the 105 call here at 2.3, stop loss at 1 and a target around 4.5 for this series.
Okay. Well, any other stocks, Vinod?
Yeah, two other large cap, slightly larger cap. One is Marico, which is I'm buying the 325 call at 5, stop loss at 3, target of around 10. Essentially because the copra prices are now going down, it is harvesting time, and the stock has run up 28% in terms of OI this series and 7% in terms of price. I think it will end the settlement at a much higher rate, so I'm suggesting to buy the 325 call, 5, stop loss 3, target of 10. Okay. And in case of Titan, I am buying the 900 call at around 10, stop loss at 6 and target of around 18. This again is a stock which has seen 27% OI being built, and the stock is up 9% this series.
So clearly FMCG and consumers, all our other experts also were backing the same stocks.
Yes. Okay. Well, thanks a lot for joining us and giving us all of those ideas. So that's how you can approach the F&O space today. But let's get back to tracking some fundamentals as well, right? Cipla is a stock on our radar right now. You just heard the news flow on that nausea drug. Ekta joins in to give us more details on that. Ekta?
Well, definitely positive news for Cipla, where they will be joining or they will be launching a Loxy generic, which is basically used for nausea, which is induced due to chemotherapy, basically as a authorized generic in the US. So that means that the innovator of the drug will continue to manufacture the drug, but Cipla will be marketing that particular drug in the US for them. And this is definitely positive news for Cipla, simply because the management had guided that yes, there would be a few significant launches in the near term, and the management has managed to stick by their guidance as of now. Now, if you're talking about a market size of around $460 million, it is probably going to get diluted for Cipla because there is additional competition expected, and we could probably even see the likes of Dr. Reddy's launch this particular drug, and it is expected to be one of the significant launches for them in their pipeline as well. So the market share will get diluted for Cipla, but if you're talking about a marquee launch for them and sticking by their guidance, that's the reason the stock will react positively to this piece of news.
Told you how much money they might make, Ekta, say in the next 12 months or something?
Well, the market size is $460 million. What we are going to see is incremental competition come into the drug. Okay. So we have to see the next number of launches in order to assess how much they will likely make in the next couple of months from as an AG launch, authorized generic launch, where margins are tend to generally be lower than others.
Okay, thanks a lot for that. Anyway, Cipla has been a big underperformer. I mean, in the last 1 month, it's lost.
Worry that Indian market has to negotiate will be Brent crude trading now above the $70 per barrel mark, supported also by Saudi talk of extending output cuts into 2019. David Linux of Fat Profits joins us. Good morning, David. Thanks much for finding time for us. Well, what is this largely a dollar fall kind of story, or is there really going to be a supply demand mismatch to the advantage of the bulls?
Oh, good morning, Arthur. Certainly, if you have a look at the headwinds that, the tailwinds that are driving the price at the moment, you'd have to suggest, and you've mentioned one, there've been a couple of factors that keep popping up. The first is OPEC and its 32.5 million barrel ceiling. There is talk from that particular organisation now that the ceiling will remain beyond 2018 and in fact go into 2019. That's given the market some heart, even though we're still some way from the end of that condition at the end of this year. The other is the fact that markets are now getting a bit concerned that the US may apply sanctions to Iran, and the 3.8 million barrels of oil per day production that comes from that country at the moment may be sanctioned, and that would put a significant hole in the supply. So that's why we've primarily seen the crude and the OPEC oil prices rising.
Okay, so apart from these two reasons, you spoke about the supply cuts extension and the fact that the US may reintroduce sanctions against Iran. David, the other thing people are talking about is the launch of the Shanghai crude oil futures as well, and that will, mark the dawn of a new oil price benchmark to rival Brent and NYMEX. Do you think that changes the dynamics a bit, and how would all of this affect crude over the next, say, 3 to 6 months?
Certainly the introduction of a new futures contract in China will probably see some speculative plays now moving away from the more traditional exchanges where we've seen those contracts resting. China is a reasonably big importer of crude. In fact, it's now probably the biggest importer of crude at around about 8 to 9 million barrels on average a month. So they are a significant player. So that would suggest that any futures contracts that are set up in and any futures contracts that are established in that country will in fact probably be very sensitive to the imports that country does bring about from month to month. However, overall, we don't think it will primarily change the broader structure of the oil markets significantly. What we will see, however, is perhaps a shifting from more traditional exchanges to the Chinese exchange once we've seen the establishment of a really clear trading in that particular contracts.
David, leave us with a range for the next 3 to 6 months and an average for Brent.
Certainly, we're not looking quite that short term. Our end of year price for Brent is between $74 and $84. So already you can see that the price at around 70 hasn't got a lot to go in terms of our calendar year end price. So we would suggest to you that the supply factors that we've talked about will be well and truly matched by the demand factors that are coming into play, and that is the coming Northern Hemisphere summer, which will see prices, we believe, driven a little bit higher. So overall, we would expect to see a more modest increase in the Brent price over the course of 2018, and we'll keep our end-of-year price, as I said, at $74 to $84.
All right, David, we leave it there. Thanks a lot for your time today. Well, let's move on then. Mehrbun Irani is with us, MD and CEO of Ginny James Consultants. Mehrbun, good morning. Good to have you on the show here. So, do you guess this is good time to start putting some money at work, or you reckon there's more to go in this correction?
I think judicious selection of stocks, I think, plays a very, very, very important role now. I think the universe of stocks which are worth investing in has definitely narrowed down sharply because of the developments over the last 2 months. But people need to be careful. Is this a buying opportunity? Certainly from the longer term, yes. But as I said earlier, it's not buying the market, it's buying individual stocks here and there. I personally believe that the markets work on 3 pillars. One is fundamentals, liquidity, and sentiment. And I think sentiment has taken a major hit. Started with a small tinkering as far as the Texas goes of long-term capital gains, and the bond yields went up. The US markets and the global markets came down because of bond yields going up in the US. Then we had the Nirav Modi issue, complete loss of faith right now in the banking system, maybe a little bit over-exaggerated. But at the end of it all, you are now staring at what the global cues are thanks to Donald Trump. And Donald Trump has been one global leader which we all believe he will do what he wants to do, and that is the big fear now. What happens next? Will it lead to intellectual property problems here and there? So I think the whole market is right now in the midst of complete fear from complete greed, which was 3-4 months ago. So whenever there is excessive fear, it turns out to be an opportunity to buy. But in the same breath, I wish to state that nowhere I'm suggesting this could be the bottom. We could possibly be a little 5% away from here, but you can't wait for the bottom. And certainly there are individual stocks which could have it bottomed out and which could provide long-term opportunities. So my advice to our investors is start looking at buying opportunities and don't go by one fad which normally investors have. The stocks have come down, one should buy it, because what comes down will go up. Not necessarily so, but there are stocks which I believe have been completely widowed, completely ignored at valuations where I feel the downside could be very limited and the upside could turn out to be quite good over a period of time. And I personally believe investors should start looking at them and start putting some money in them.
Okay, why don't you name them?
I would say some widowed stocks when I mentioned was, I think Tata Motors is one, a stock which I have completely given up on for the last 2 years or 1.5 years. But I believe the price makes me feel it is available at a price lower than what the DVR was just 18-20 months ago. And I fail to recollect as to when is the last time I read a buy report or even a report from any broking house in Tata Motors, completely ignored at 320, 325, maybe a 10 rupees downside here and there. But I think it's the best beta play, if you ask me, in this market, because if you look at the value of the business, I think that is a small, minuscule right now, and people are completely ignoring it. Nobody talks about it, completely underowned. So that certainly makes me feel it's a decent trading play among the frontline stocks, along with something like an LIC Housing. Has underperformed the bank Nifty by nearly 40% in the last 18 months. And I think at the present level, I don't see a downside of more than 5-7% in LIC Housing, but certainly an upside of more than 15-20% because we are looking at a CAGR EPS growth of around 15% over the next 3 years. And the third would be the metal pick, Vedanta. Okay. Ex-dividend now 21.5 rupees, going at 275 rupees. Can it come to 260, 265? Answer is yes, it can. But then are you trying to say that anything that you buy is not going to go 5% lower from here? Certainly not. And if you believe that you're an investor, you should ignore that 5% further fall in the stock and buy. And a 320, 330 can come anytime and you make your money. That is the way one should be looking at frontline stocks right now, where the downside is limited in 3 stocks I mentioned, with clear disclosures.
Okay, so Tata Motors, LIC Housing and Vedanta are a couple of stocks that you're looking at. Merabun, hi, good morning. I wanted to chat a little bit about the real estate space. I mean, we just heard Blackstone investing a huge amount in India real estate, and you know, lately a lot of PE players have been interested in the rental arms of real estate companies. We saw it with GIC and Prestige as well. Anything that you like in this space for a long-term view?
I would say that I would go with possibly the best company even in terms of the balance sheet, and that would be Godrej Properties. Outside that real estate space, I still believe that the pain which we have been seeing over the last 2, 3, 4 years, I think is not behind us. It's not going to be easy for this sector to revive. The only thing is, again, it's a sector which is completely underowned. And people may argue now that with stocks, risk aversion coming place, people will go back to real estate and start investing in it. Certainly, I'm not saying that that is not a wrong way to do a little bit of propaganda for real estate as such as an investment asset class. But I still believe that I don't have the courage, heart to come out and recommend on a powerful channel like yours to buy into real estate stocks. But if one wants an exposure, I would go in for this affordable housing companies, maybe something like a Ganesh Housing or something like an Ashiana Housing, those type of companies, because I believe that a lot is yet to be heard, especially with elections 14 months away. Affordable housing is going to continue to, people are going to continue to discuss about, and with valuations now having come down very sharply in most of these companies also, I think there could be a trading opportunity here and there. But as an asset class or as a segment, whether I should buy into real estate stocks, my answer would be no. So I would stick to something like a Godrej Properties and maybe something like an Podar Housing, Ashiana Housing or Ganesh Housing in the affordable housing segment.